let's get in our guest, and of course keep in mind that how I said that the Fed minutes didn't do anything to the US market, so they were very, very flat as well. Peter McGuire joins in to talk about all of this. Peter, great having you. Thanks for joining in. I hope all is safe out there in Sydney.
Absolutely, Niraj. Lovely to see you, and our same best wishes to everyone in Mumbai.
Yeah, thank you. So, Pete, tell us, do you reckon that the world is reconciled to the fact that we are out of the war zone, if you will, and would risk premia across asset classes adjust accordingly?
Well, I think they're certainly right, Niraj. I feel as though that's probably happened over the last 24 to say 36 hours, that wake-up call. And as quickly as it winds up, it certainly is easily wound down. And we all want that. There was, people worried there as far as kinetic warfare. So let's put that from a humanitarian side and park that the best wishes for everyone is that it ends peacefully. And that seems to be the feel at the moment. And that's been demonstrated in that wonderful barometer, Niraj, called crude oil. And we've now got Brent sitting under 93. You've got WTI at about 91.5. So that's a good sign. And I think it's a good sign to the consumer.
Yeah, it certainly is for the consumer and for an economy like India, Peter. It's a great sign. Just since you brought that up, Peter, 100 was looking like a certainty. If indeed there are no further forwards on the geopolitics, do you reckon we've made a bit of a near-term top on crude, or are there other triggers which could bring about? Because Bloomberg today was reporting that the Iranian nuclear deal and the world getting closer to that being signed as well might actually help crude prices because the supply situation might improve.
Well, you would think so, Niraj, from a geopolitical standpoint and the nuclear issues engaging Iran, that yes, if that was a sign off there, then certainly you would see again further, in the sense of risk premium being stripped out of the market. But a couple of things that we can't get our mind away from, and that needs to be very much considered. We're talking about being at tank bottoms as far as supply. We're understanding as far as supply underinvestment left the world and the market very vulnerable. That's across the crude sector globally. We've got the entire complex is extremely tight. And then you've got super backwardation for a number of those across the Brent market and certainly WTI recently. So that's a consideration that one needs to be conscious of moving forward from a trading perspective. And the upside risk still is high. I don't suggest that we're not going to go back there because there could be other spikes, but that's what a trader's got to be conscious of, Niraj.
Okay. And Peter, what is it that you're watching out for the next few days? The Fed meeting is in March, so that's about a month away or thereabouts, or less than a month away. In India, we've got the elections as well, but that's separate. That's a niche. What is that you're watching out for in terms of high frequency indicators in the near term?
Well, it had to be very much the situation in the last matter of days as far as Ukraine and certainly Russia. So that was something we were worrying about, the thought processes from the Fed, and worrying certainly from the FOMC members. They're very conscious from a inflation standpoint that beyond the pandemic, it's reached across or affected all sectors of the US economy into the broader economy, being high energy prices, inflation, food, stud lumber, construction costs, you name it, everything's costing more in the US, so then inflation's galloping away. So the Fed are conscious of that. And how quickly, if you look at Jamie Dimon, you think, well, Jamie's coming out 2 weeks ago or so and said we're going to see 7 rate rises. Little old humble me and humble everyone else is saying, wow, if that's going to happen, then expect some, I think, boom times to the upside for US dollar, for bonds, and again, for the volatility, Niraj.
Well, we can do with a little bit less of that, but be that as it may, it is something that I think everybody would keep a keen eye out for. Peter McGuire, always good having you. Thank you. Actually, before just I let you go, Peter, quick 30-second answer. Is it possible to try and second guess, even for an expert like you, what could be levels that which crude could settle in, or is it just too many moving parts right now to try and factor that in?
I think it's moving parts, but also, Niraj, we've got to be conscious that it can spike, and you could see a couple of dollars added off this, because as your markets come down, they can bounce from that low. So you could see another $1 or $2 pushed up, or you could see continual downdraft. The issue is geopolitics, risk premiums, and if nothing happens across that global footprint, then you could see the market slowly edge lower from here.
Got it. Okay, but largely difficult to predict as well. And Peter McGuire, thanks for laying out all of those factors for us, and much appreciate you joining in today. Have a great afternoon.
God bless you, Niraj, and to everyone, thank you.
Yeah, thank you.